professional companies have hardly lost any money in the last 10 years. Why? Because it depends on which cryptos do you buy and do you trade, you manage. In our case, in the case of Carta Capital, we only trade blue chips. We don't do shit coins. I'm only looking at making for myself and my clients between 50 and 100 per year. That's it. We're simply purchasing gold mines in the 4 key best jurisdictions, and we're simply using our coin, the gold, the in-ground gold in that mine will be the asset that will back the stable coin.
Gustavo Montero, investor and chairman of Carta Capital.
The most important criteria that you should look at it when you're investing in the company, and I always say this, is the board of directors. Make sure that the board has sufficient gray hair experience in all the major factors of the running of that business. If you don't find it, don't invest in that company.
Greetings everyone, I'm your host Kirill Ivanov, and today my guest is Gustavo Montero, investor and chairman of Carta Capital. We'll be exploring smart investing and key focus areas for 2025. Hey Gustavo.
Hey Kirill, how are you doing?
Yeah, perfect.
Good to see you.
Can you introduce about yourself and share your experience and journey in finance world?
I'm a very old guy, so it's a long topic. I'll make it very short.
Briefly.
Gustavo Montero, I'm Swiss, trained as an engineer,
first
of all. All right, I'm not really a finance guy, I'm an engineer.
Okay.
And then part of my career, I went into auditing after my MBA in finance in the US.
Okay.
And from auditing, I went to banking. I was a CEO of a large bank in Switzerland. I opened the bank. And then I went into another bank in Switzerland in the board of directors. And then I left all that to become an entrepreneur, like many people. And currently, I'm the founder and chairman of Carta Capital, which is a digital assets management company.
Oh. Okay.
We manage digital assets for clients. It's like an investment company, but our asset class is digital only.
Okay. And why you decide to leave work in banks and come to entrepreneur?
So it's a fantastic question. It's a question that I can give you 10 hours as an answer, but I'll be very short. I just don't believe in the current financial system. I think the current financial system is completely broken, particularly since 1971, when we decided to get rid of the gold standard. You know, the gold standard was $8 for so many grams of gold in Fort Knox in the US, and all the other currencies were pegged to that.
Oh, okay.
71 we said no, so all the central banks started printing money like crazy.
Okay.
So the system went haywire. I don't think that the current financial system is working anymore. It's massive issues, and it's being replaced by the digital financial system. That's why I went into that.
Okay.
It's logic for me. As an engineer also, it's very logic.
I see. Can you share your personal opinion and personal principles of investment? What's the approach and way to find some investments?
All right. Well, first of all, investment in general is for professionals a very systematic approach. Think about it as an audit, right?
Yeah.
You go through a review of several elements concerning the market, the product, the company, etc. And then at the end of that, analysis of various parameters, mostly metrics, mostly numerical parameters. You come up to whether you invest or not in that specific company. In our case, is whether we invest or not in a specific digital asset that could represent a company.
What's the kind of digital assets are you considering for
We
investments?
are mostly working in the crypto space.
Okay.
But the crypto space is very, very vast. As you know, when people think about the crypto space, they all think about Bitcoin. And I always tell them there are thousands of coins in the market. There are very many different products. You know, you have staking, you have mining, you have just a whole bunch of products. And the reality is that most of the products we have in the digital space, they mimic the projects we used to have in the traditional prior financial environment. Take staking, for instance. Everybody speaks about staking. A lot of people have no idea what it is, but it's just simply lending crypto assets. It's lending. So you could have said, if I was in a bank before, or when I was a banker, I was doing lending. I was lending dollars or euros, whatever, right? I mean, I'm lending crypto assets.
If you invest fund and you work and operate with good capital, crypto is up and down every time. How keep a percentage every year?
That's a fair question. The reality is that there is a tremendous amount of ignorance about what we're doing in the digital world or in the crypto world. The digital world is not only the crypto world, but I'm referring to that asset class. The reality is that professional companies have hardly lost any money in the last 10 years. There was 1 year when everything went haywire, but from the rest, no. Why? Because it depends on which cryptos do you buy and do you trade, you manage, where you're going to basically have positive returns, flat returns, or negative returns. No? In our case, in the case of Carta Capital, we only trade blue chips. We don't do shit coins or anything like that. We're non-speculative, nothing. And the reality is that we have a track record since 2016 that anybody can go and check because it's on chain. So all the transactions are public, of anywhere between 50 to 100% for every year. As a matter of fact, last year we did 119%. And this year I think we're going to go beyond 100. So our alpha, maximum alpha, what we're looking for is 100. But I'm not looking for more than that. That's what you have to keep in mind. I'm not looking for anything else. There's people that say, we are the most boring people in the block in crypto because I'm only looking at making for myself and my clients between 50 and 100 per year. That's it. And that, if you do it professionally, is not so difficult to do. That means that there are about 20 or 30 companies like Carta Capital in the world, serious companies managed by ex-bankers, right?
Yeah.
Myself and my partner were ex-bankers. We're always making money. It's just that we're not making thousands, but we're making anywhere between 50 and 100.
And what's the kind of blue chip companies which you mentioned before in crypto field? For example, it's like BTC, Ethereum.
As I said, I told you before the interview, I'm not going to mention any names because my lawyers don't like that. But
description.
But I can tell you what it is. If you look at the graphs of the main crypto assets for the last, say, 2 years, you see a number of assets that are within the first 20 or 30 positions in terms of our market cap, but also in terms of yield. Those are the ones we trade, all right? Except that we manage them. So it's not like we buy a position and we hold it, we do nothing about it. We manage that position. If we are, at any point in time, we're trading around 20 assets, we're always managing them because we're managing vis-a-vis what the markets are doing. Right? Sometimes we retreat into a stable coin. We're not trading for 3 months. We are preserving capital.
But you managing projects, it's like it means in one time you're selling and one time you're buying.
That's called trading. So you're buying and selling or holding certain assets. Right? Our work is not different than what I used to do when I was a banker, right? It's very, very similar. It's just that it's the asset class what's different. We are in a digital asset class. When I was a banker, I will trade debt, stocks, whatever, traditional products. We don't do any of that. We only do digital assets, right?
And if we're considering like digital assets, now is a really strong narrative with RWA. Tokenization.
Real world asset tokenization.
Do you see big perspective there?
Well, I'm telling you, we're speaking about Carta Capital, which is the main company we have since 2016 with my partner, my British partner, who's an ex-banker from London. But we have a separate company called USDR Commodities. It's a BVI company, and the company is working directly on real-world assets organization. What we're doing there is extremely simple. We're simply purchasing gold mines in the 4 key best jurisdictions, so Canada, Australia, New Zealand, and Chile. All right, we're buying gold mines, and we're simply using our coin that is actually listed in Binance, although right now it's not worth anything because we haven't really started the project. But basically, within actually a few weeks, we're going to have the first mine from one of these countries, which is obviously we're working directly with the owners of mines. That mine, the gold, the in-ground gold in that mine will be the asset that will back the stable coin. So that is a real world asset tokenization where we take in-ground gold and we issue a stable coin against it.
And how you figure out with regulation, because it's a really tough question.
It's a fantastic question. Well, first of all, as you very well know, regulation is not uniform in this world. That's the first thing you have to understand. There's not like one regulation.
It's different countries.
There are many different regulations. So we will work directly with the regulatory environment in every country or in every area where we need to work with. Also with the exchanges, the exchanges are part of the regulatory environment, and several parties that are directly linked to that. So, as far as we're concerned, we go by the book, by the laws, and by the accounts, by and with the lawyers. We're ex-bankers and ex-auditors in my company, so we do everything by the book.
Okay, so if I'm a beginner, can you all describe and give details how RWA tokenization exactly work? More easier questions.
You want me to tell you the secrets? No, there's nothing secret, really. There's nothing strange about it.
I mean,
but I'll tell you
which benefits for retail can get from this technology?
Well, first of all, it depends on the asset, all right?
Okay.
That is backing it. Let's take gold, which is what we're doing.
Okay.
What is that we're doing? We're making sure that gold is now a popular item or a popular asset, an asset that can be bought by anybody. The coin that we are going to put in the market in the next few weeks, it will be worth $1. So everybody in this world can not everybody in this world, that's an exaggeration, but many people in this world can spend $1 and buy themselves $1 of a stable coin that represents whatever amount of gold is actually the pegging number or the transaction number. Right?
And where you see also some perspective and opportunities except of RWA for 2025?
You mean, very good point. I think that stable coins are something that is going to go very deep down in the financial markets. As a matter of fact, it is already happening. If you read the newspapers, if you read the news, it's very, very important. Real world assets tokenization is a different one, which is not necessarily an only stable coin. We're issuing a stable coin, all right?
Okay.
Because we have audited gold, and our thesis, our ethos is very simple. We have audited gold in ground against a stable coin. Therefore, anybody can come and see what it is behind. But there are other products and other products that can be in the market. But I'll say, stable coins is definitely a trend. Real world asset tokenization, whether it is a stable coin or a volatile coin, whatever, then you have a multiple number of coins that represent real, that solve real problems in the world. I like to mention, not by the name, but one coin that everybody knows about it, that was created specifically to replace SWIFT, all right? SWIFT is a system that we, bankers, we've used forever to transfer money from one country to the next. The problem with SWIFT is very old, owned by one company.
Takes too much time.
It takes a tremendous amount of time. It is super expensive, and it makes mistakes. I mean, I don't know if you have had that situation. I had it myself, of just having a banker that made a mistake on the number in SWIFT, and then your money didn't go to the US or to Canada. It went to China. All right? And then because in the SWIFT system, we use what we call correspondent banks. So if you're not using the same bank, you may be using 5 or 6 banks all the way from the country you're issuing that transaction to the country where the transaction should arrive. And because there are mistakes in the SWIFT, the money will be everywhere. Yeah. So this specific coin, based on DLT, distributed ledger technology, is actually there to replace SWIFT. Cheaper, faster, doesn't make mistakes. Take any problem today, all right? Any financial problem, all right?
Yeah.
We have many, no?
But
and then you involve DLT into it. I'll give you one example. I was an auditor for a while, all right?
Yeah.
When you do audits, and I hope some auditors are listening to this because they will understand what I mean, you actually go through a protocol because you have no idea if the transaction you're auditing is legit or not. You're actually establishing whether it's a real transaction or not. So you have backup documentation and a full protocol and the whole thing, whole jigsaw. Well, if you used DLT for accounting, you will only have one entry. One entry at the beginning of the process that is known to the company, to the lawyers, to the accountants, to anybody involved with that transaction, is accepted as the transaction, the legit transaction, because it's in DLT, cannot be modified, right? You cannot tamper with it.
Yeah, it's really simplified process.
So the question I'm asking is, what do we need auditors for?
Yeah.
If the transaction is already... So That's not going to happen from one day to the next, but it will happen for sure in the future. But what I'm trying to say is that you take any problem we have where DLT can be applied, and then the quality of that system, whatever you're trying to solve, will be much better. Don't forget, and this is something I teach my students, I teach at several universities, I teach my students always the same thing. Don't forget that DLT is nothing more than a database, right?
Yeah, exactly.
Blockchain, what's blockchain? It's a database. That's all, right? It's just that it's a special kind of database. You can do many things, among others. You can transfer value from one computer to the next, or one phone to the next. So, but it is a database. So think now twice. What is it that we're looking for right now? How do we work the tremendous amount of data we have into databases?
Yeah.
That's the answer. Right?
Yeah, but nowadays, like you mentioned about a really good solution which solve a lot of problems in our world. But nowadays, people looking for some meme coins, some interesting this stuff, and retail going to this direction.
Yeah, well, listen, let's
and sometimes I really don't understand how it's working.
Let's call a cat, right? I've been around the block for many years. I have over 35 years of financial experience, global. 45
years, okay.
So I can tell one thing to the next. The problem we have in the blockchain space at large, I'm not only talking about the issuing of coins, the blockchain space at large, is that today there are no barriers to entry, right?
Yeah.
If you and I sit here and we decide that we want to do a coin against this cap we have here, we just call a guy that can program, can write a protocol, and we just issue the cup coin. Now you'll ask me, what is this for? And I'll tell you nothing, but we can make a lot of money out of it.
Just for fun.
Right?
Yeah.
So that's what I'm saying. So we need to make sure that we find a way of cleaning the markets from all that. I laugh loud when someone comes and said to me, give me all your money, I'll make you 1,000% a minute. I said, how are you going to do it? I mean, I have this coin somewhere that is going to do it. All right, fine, no problem. But we need to clean the market from that. But the market is cleaning itself, by the way. It's a good thing. Since a few of the bad guys have gone out, we are being more careful, etc. It's just that people are not being very careful, because at the end of the day, everybody in the world likes to make money. So if someone comes to you and say, I'm going to make 1,000% every minute, you may listen to the guy. You may give him $100, all right? And then you have about another million people, each one of them give them $100 and say, well, this guy just...
He will be billionaire.
Right, yeah. So that's what I'm saying. So there are no barriers to entry. And I just hope that as these industry progress, barriers to entry will become higher. There's going to be a lot more regulation. I am for full regulation, by the way.
Okay. Right?
Because I don't think there is any problem with it. The actual product and the backing to it is still the same. It's still fantastic.
Okay.
It's just that right now it's a situation where, as I said before, there's no real regulatory environment. Clear, it's regulated here and there. There's no global standard. We need to go to that, and for that we need to work. We need to wait until at least another 10 years, in my opinion.
And if we're going back and discuss about trends for future, what do you think about AI? Because it's a really huge and incredible narrative.
I know, it's the...
How it can improve our life.
I think that before we discuss AI, we need to define AI. I think the majority of people have no idea what AI is. I mean, this is a buzzword today. Everybody speaks about AI. What is it, AI? Take it from an engineer, all right? First of all, AI has been around for a very, very long time, all right? AI, I mean, I did engineering school many, many years ago. AI was already there. What is AI? It's simply using a technology device such as a computer or another type of element of that sort. Not only the computer can do artificial intelligence, and actually teaching that hardware through specific software, which is a protocol, right?
Yeah.
You're teaching the computer how to do a specific task, all right?
Yeah, exactly.
That's all. Nothing very mysterious about it. Just say, we're going to teach a computer right now with a specific robotic arm that I just gave you. I put it here. Move this cap from here to here, right? That's all.
Yeah.
So that's AI. Question is, will AIs replace the human being, for one very simple reason. We don't know how to teach a computer to deal with emotions. What will it replace? For sure, is menial tasks. And the question that a lot of people would ask, including myself, is what are we going to do with the people that today we are doing these tasks? What jobs are we going to give them? All right?
Yeah.
That's the problem.
But do you think emotion will be need in future, because future getting more rational?
Well, your question is super philosophical, Kirill. Your question is basically, do we need humans or we need robots? That's the question, right? Because if you're telling me that everything is becoming rational, then let's go and live in a cave somewhere in Antarctica, and let's leave all the robots live our lives, right? No, I don't think that's the case, right? So I think that the human being will always be there. It will always be preeminent. Remember that we program robots, not the other way around today. Now, where the edge isn't a different thing. You have heard about quantum computing, right?
Yeah.
Right.
I heard.
That's what
Of course, I heard.
That's what the problem is, and I don't have the answer. No engineer has the answer today. I mean, this has been, it's a process right now. As a matter of fact, it's funny because a lot of people talk about quantum computing, and I'll explain that in a minute. But the reality is we don't have quantum computers ready to work. We have fantastic prototypes in Europe, in the US, but they're not ready yet. But basically, that's where the problem is. Because you see, everything that we work on right now in terms of computational power is based on a binary system, 0, 1, 1, 0,
Yeah.
all right? Your phone, your computer, whatever we have that has some degree, it's digital to an extent. Let's use digital as a word, as a buzzword. It's based on 0, 1, 1, 0.
All going to
right?
digital.
0, 1, 1, 0, right?
Yeah.
Binary, right? And the combination of 1, 0, 0, 1 gives you whatever we have in digital. Quantum computing is not based on a binary system. It's based on something else that basically is no longer 1, 0, 0, 1. So basically, we're going to have maybe the same answer in two places, right?
Yeah.
Or two different answers, or whatever. So you could say, well, that's looking little bit more like emotional, no? In the sense that it's looking a bit more like, well, at the end of the day, the computer can have other options.
But how it can working?
Well, no, we don't know that. Wait, we don't know that. The only thing I'm saying is that once we have full quantum computing app operating, we'll be confronted to a new series of challenges, very good things and probably bad things. And that is perhaps where some people, some scientists that I work with in different universities in the world are saying that that's where the true artificial intelligence will come. The one that can mimic emotions in a human being. That's a scary thing, all right?
Yeah.
For me, as a human being, as a father, of an 18-year-old daughter,
every
whatever,
time,
I'm not really sure
situation.
if I would like something like that to happen. But there's one thing for sure. If you look at the evolution of technology from the beginning to now, it's unstoppable, right?
But if we're going to in reality, how we can now AI for for investment?
AI for investment. Okay, very good.
Yeah, we
right.
discuss in general.
Sure, no problem. Right. Well, first of all, AI. I think it's important to understand that AI is the use of data, right?
Yeah.
Right. So, where do we store the data? Distributed ledger technology, blockchain. So, I always say that AI is the other side of the coin of blockchain. On the one hand, you have AI.
It's really interesting because
blockchain
blockchain
is the data, right?
Yeah.
The use of the data, and AI. Sorry, the storage of that data and everything else we can do with that data. But AI will apply.
Do you use AI in your business?
We have one of our trading strategies is a bot that uses AI in order to determine transactions, financial. I cannot give you any details because it's proprietary, but yes, we use elements of AI into that. Yeah.
You can't share information about your company, what you do exactly. Yeah.
No, I can, but I can share it in general terms. As I said, we have 4 strategies. One of them is an automatized strategy that uses AI in order to determine which transaction it's going to do, what are going to be the points at which it's going to buy, it's going to sell, which out of the different assets we put in front of it, will it buying or selling. So it is choosing. It is doing the same thing that a trader will be doing, all right?
Yeah.
So yes, we use it. Many other companies use it. There's nothing new to it, all right? Nothing new to it, really.
But if we're considering I'm beginner and people who will watch also like want to start do investment, what you can recommend for starting?
As I said, well, you know, if I again, I'm not going to recommend companies because my lawyers don't let me do that.
Not exactly recommend blue chips companies.
I can tell you
criteria.
The criteria. First of all, as I said, if you're looking to invest in a company that's working with AI, look at the market size. The criteria we use are no different than the criteria we used in the past. They're the same. All right? First of all, is the product useful or not? Is it solving a problem?
Yep.
There are millions of companies that produce a product that's not solving any problems. Right? So why are you going to invest? So if it is solving a problem, then second is the market sufficient enough or large enough for this product to be sold? Is the market growing? Meaning, is it scalable? Can we sell in country A, country B, country C, etc., etc.?
AI, good example.
Exactly. Then the technology behind it. You have to know who is actually running and putting together the software. There are good software engineers and bad software engineers, like everywhere in the world. But I think the most important criteria that you should look at it when you're investing in the company, and I always say this, is the board of directors. Funny enough, very few people look into that. I'll give you an example. I was asked to go in the board of directors of a company last week. It was in the health sector, right? Okay. Very nice company. And I looked at the board. Actually, I was asked if I would be an investor first before the board. And then I look at the board in that potential investment for our company, and I found a whole bunch of very interesting people, but there was nobody with any financial experience in the board. I went back and I said, how many bankers do you have in the board? How many ex-auditors, ex-bankers do you have? Well, none, because we are doing health. And I said, do you understand that for me, you understand nothing about numbers? Nothing. And you want me to put money in your company when you do not understand the most important part of your company, which is the financials. Yeah. Besides the market, huh? Not that the market's not important, it's super important. But so, as said, I think that when you're investing in a company, look at the board of directors. Make sure that the board has sufficient gray hair experience in all the major factors of the running of that business. If you don't find it, don't invest in that company. Crypto or industry. People always ask me, shall I invest into it? And I said, what do you know about it? Nothing, don't invest. Don't put a cent into it. Why? Because you're probably going to go broke. So first of all, you need to understand the industry. And for that, you need a lot of research. Now, research, you can do it on your own. I mean, you don't need to have a PhD in something to be a researcher. You just need to be logically intelligent. That's all. Nothing more than that. I mean, average intelligence. You don't need to be a super intelligent.
Turn off emotion.
No. Just learn about the industry. Once you learn about the industry, first you will understand if it is an industry that makes sense or not, and then you go through many other criteria. But I'm going to add something to that. In my opinion, unless or some exceptions, you should never invest on your own. You should always ask people that understand the industry their views about it. All right?
Yeah.
So go and talk to other people. Don't do it on your own. Yeah. Perhaps out of everything I'm telling you, it's the most important thing I'm telling you.
Find people who understand marketing.
Of course. Don't go on your own. It's ridiculous. Say I want to, let me tell you something, I know nothing about it. Say I want to invest in space vehicles, all right? What do I know? I'm an engineer, but I know nothing about it, all right? I've never done space engineering. And I want to invest in that, all right? Will I invest in that without speaking to every single space engineer I know? And I know a few. One of my best friends is an ex-astronaut from NASA, all right? Okay. I'll go and ask him.
Yeah.
First person, and then I'll ask him to introduce me to all his friends that are doing that, etc. And then I'll have an opinion on the industry, and there I'll start going down into criteria. But it's an essential thing for you viewers. Do not invest in your own. If you don't understand the industry, don't invest in the industry. That's perhaps the next thing. Never invest in anything you don't understand.
Yeah.
Right?
I totally agree with you. But do you do all your work only by yourself, or you have team?
No. We have teams of analysts and experts that will work for us. Do the research is huge. I mean, I'm the founder and the chairman of 2 companies. I don't have time to go into research. I wish I did. I used to do that. But no, you have teams of people that do.
I'm curious about how you delegate and how manage all team process, and how you find people.
I am the best person at delegating. I very long ago, I decided that the only way I could live myself a nice and correct life is by applying management by objectives. That's all. My teams and my directors, they have objectives. They have to do this during the week, all right? Whatever it is that was decided in the meeting on Monday morning. And then they'll do the job. And at the end of the week, the only thing I care for is the job is done. I don't care how they did it, all right? So I delegate a lot. No, I've never been a micromanager, and I hope I'll never be one. It's just so boring to go and find out why did they do this, why didn't do that. It doesn't really matter. So at the end of the day, the only thing you want is that they move this cup from here to here, all right? Now, how did they do it? I don't care. Maybe they went for a cup of coffee, they went for a chat there, they did all kinds of things, and then at the end of the day, they put the cup here. I didn't see anything of that. I just saw that at the end of the day, the cup was there. That's the only thing I wanted.
But in this case, it's really important how you find people who will do all this business.
That's the most difficult thing.
How you rate, how you find these people.
Kirill, the most difficult thing that exists is finding the right people. There is no secret, all right, to do it better. But I do tell you one thing. Experience helps a lot. I can tell you now, if I interview 10 people here to be a top manager in my company, I can rapidly tell you the 5 that are none, right? They don't have the experience, out. In probably 10 minutes, I can tell you those 5 people, they're not good for the job. Then there is another 5. And out of those 5, I can probably tell you in the afternoon, the 2 that can do it by experience. Because I've done what they have to do.
But you got this experience before.
Of course.
But now you understand, and what's the general rules for this?
Exactly. So, I wish that you could say they're general rules. So some would say, yeah, the general rule would be is that if you need an engineer to build a car, you need a car engineer. No, that would be a logical thing. But it's not as simple as that, all right? It's not as simple as that because of all the emotional part and everything else that goes with a human being. The only thing I'm saying is that in the course of your professional life, all right, you develop a very good nose. And everybody who is my age will tell you the same thing. Particularly, I was a CEO of a bank. I opened a bank myself. Then I was on the board of another bank. I was an auditor before. I've been around. So I've met millions of people. Perhaps, remember what I told you before about artificial intelligence? How do you teach a computer to do the task? You feed the computer millions of pictures of Kirill until it recognizes Kirill. Yeah. I just gave you the answer to hiring someone. So you have millions of experiences in that specific task. So when you have someone in front of you, it just takes for you to ask a few questions, and you know very rapidly if those millions of experiences that you're looking for are there or not.
Yeah.
All right?
Yeah, right.
See how we're going back to artificial intelligence? Why? Because the human brain is artificial intelligence by definition. Remember, we're trying...
Yeah, people take
remember,
brain
what
example.
are we trying to do with artificial intelligence? We're trying to copy the human brain.
Yeah, exactly.
Now,
to optimize all works.
The human brain with experience, unbeatable, right? Unbeatable.
Yeah.
So that's the way you do it. So, in other words, the message for your audience is make sure you have experience in your board of directors, so people that have been around and can tell children what to do.
Okay, it's very valuable. What do you think about what we should wait in the finance world next 3-5 years?
Fantastic question. Well, I'll give you my own opinion, good or bad, is what I think. And we're talking about only finance. We are at the end of a cycle, a large cycle, at the end of a system, which is the system that we put together that created what we call the Bretton Woods Agreement or the gold standard, right? So
okay.
You were not born yet, Kirill, but we had that before, right?
Yeah, I know.
In 1971, as I said to you, we broke down the gold standard for a specific reason that you may not know, but there was a huge war called the Vietnam War, right? The Vietnam War needed to be financed by a president by the name Nixon at the time. And Nixon, because there was the gold standard, he couldn't just print money, right?
All right.
Because he had to buy gold in order to print another dollar, right?
Yeah.
That was the system.
All right.
So he decided unilaterally to just break down the system so he could print as much money as he could to finance the Vietnam War, all right? So since then, massive amounts of money have come into the markets. We call that M1. There's also M2, but I'm just going to simplify your life with M1. amount of money printed put in the market. So all the central banks have been printing like crazy, particularly the Americans and the Europeans, right? Other countries as well, but those ones in particular. Also, they correspond to two major currencies that we use, euros and dollars. And the inflation has gone bananas. There have been external factors, and I'm trying to answer your question to where we're going to, right?
Yeah.
There have been external factors such as the 2008 crisis. We created it because we were printing money like crazy. We were giving credits to anybody that want to do that, want to buy a house. It's a long story. But then we had the COVID that made countries to spend a lot of money into keeping their economies afloat, not sinking. There was one president of one country in Europe that said basically, we will save this country at any cost. Any cost means injecting into the system any money that is needed, right? But that created a whole bunch of problems. So, but this started in 1971. Remember, we're just talking about the current.
Yeah, I follow.
the current parts of this. So that system is completely broken right now. And how do we know it's broken? Because something called the sovereign debt. As you know, the US, several countries in Europe cannot pay the debt, right? Simply cannot. Because basically the amount of money they produce, the GDP, is smaller than the amount of debt they have, right? So if you, Kirill, were spending more money than you have to pay your rent, you're broke, no? Right? Unless you ask me for money to pay for your rent.
Yeah, exactly.
That's the case with those countries, right? Many in the world, not only, right?
It's never happened, but okay.
Right? So those countries are broke, right? Technically broke.
But
they only exist because
they operate.
They only exist because of political will, which is printing money and keeping them. It's like a patient that's dying at a hospital and someone's putting oxygen to it. So they only exist because of political willingness to keep them afloat. And also because what do we do if the US goes broke? If Europe goes broke, what do we do? Global crisis, huge wars. Financial crises produce wars, don't forget that. Because it's about which country will come up on top, and that produces a lot of friction. Nobody wants that. So we are at the end of the cycle. We don't know for how long we will be able to keep that sovereign debt alive before it pops. You must have read that.
But do you think countries not solve this problem?
I can increase your taxes by 500%. Your personal taxes. You pay for it, all right? All right? So, no, there's no way of solving it, really. There are extreme ways of solving it. Reducing expenses by the countries to almost zero. No more public expenditure, so no more public hospitals, public health. It's complicated.
That's not possible.
That's not possible, no? Increasing taxes to a huge level, not possible. So it's a real big problem. Remember the following, which many people ignore. Blockchain technology. Blockchain technology was invented in 1971. in Stanford University by two researchers that were doing something completely different. It had nothing to do with Bitcoin. This guy's is Stornetta and Hubbard, the name of these guys. Two PhD students. They were just trying to differentiate two electronic documents. When one is at T1 at 1 o'clock, the first one you print, you actually issued as an electronic document, and the second document you issued at 1 o'clock 1 minute. They're trying to differentiate that one is not the same as the other. And for that, they created the distributed ledger technology. They created a ledger.
Yeah.
All right? Tack, tack, tack. Nothing happened with that until 2008. What happened in 2008? We had the financial crisis. And it's in 2008 when this character, Satoshi Nakamoto, nobody knows a man, a woman, an institution, nobody knows anything. It's at that moment when this Satoshi Nakamoto issues this white paper and said, I'm using DLT from Stanford, from these guys, but I'm using it to transfer value from my ledger to your ledger via my phone or my computer, right? So the parallel I'm making is the following. Satoshi Nakamoto says, and read the white paper, it's very interesting. It's actually a left-wing paper. If you would.
But do you think it was created by US government?
I have no idea. No idea. No idea. But the one thing is the following. That white paper and that new asset class that Nakamoto started with one coin, which are now thousands, is the answer to the financial crisis we have. When you ask me what's happening in the future, we're at the very end of a certain financial system. It's one we created and we destroyed ourselves. There is a new financial system based on blockchain technology, right?
Yeah.
I am one of the people that says my daughter who's 18 years old, in less than 10 years from now, she will only be paid in cryptocurrencies and she will only be spending cryptocurrencies.
Yeah.
All right?
Yeah.
So that's a new financial system. Someone asked me the other day, can that solve the financial problem of the world today? And I said, maybe.
Partially.
Maybe that is one way in which we can
because
try.
It's also a way to printing money.
Well, no, wait. Remember, in DLT, I'm talking about the major currency. I'm not talking about all the other people that try to make a quick buck on it. I'm saying
Let's keep it.
the serious people. Remember that Bitcoin is only 21 million coins. You cannot issue one more coin.
Yeah.
So it's non-inflationary, all right? And it's actually deflationary, if you will, if you look at it. And the other major coins as well, the major blue chips. So if you think about it with a rational standpoint, maybe there is a possible alternative to the current financial system. But here's the problem. There's a lot of old people like me still in the board of directors of the central banks of this world. We need to get rid of guys with gray hair and bring the new generation, your generation, Kirill, into the board of directors for those new generations to say, okay, we're going to use DLT right now.
Okay.
That's what we need. So we need one more generation.
Yeah.
That's what I'm saying, 10 more years.
Got it.
All right?
Thanks for joining.
Thank you very much, Kirill. It's been great.